My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people want to make friends? I'm just trying to make you some money. My job is not just to entertain you, but to educate and teach you, so call me at 1-800-743-CNBC or tweet me at Jim Cramer. All right. We've endured the meme stock craziness and the collapse of Bitcoin. Went to surprisingly low levels, although it's still more than doubled since last fall. We've dealt with Fed officials making it clear that they're no longer on the side of the bulls or the bears. They know nothing. They're on the side of the job growth, but still wary of inflation. We've seen the end of the rush to get vaccinated, which means millions of Americans will get the new COVID variant because they refuse to get a couple of injections. We've watched as the hopes for the infrastructure bill have collapsed. We've endured shortages of everything from chips to plastic to imported goods to labor. And we're still standing. Yeah. Yep, we got an Elton John market going here. Dow gaining 69 points, S&P climbing 0.51%, NASDAQ jumping 0.79%, all-time high. We're now in a moment where the masks are off, even if they shouldn't be. And Americans are back to doing what we do best, spending money. I think this is one of those times where we can afford to do some reflection, even if it's shallow. See, things are cool. It's not a big moment. There's no real news for a bit. And it's a historically strong period for stocks. We're heading to a good one. Now, when you pick stocks, you're trying to identify superior companies, but you can't actually do that unless you know what those companies do. I always say that you shouldn't own individual stocks unless you have the time and inclination to actually do a little homework. That means reading the quarterly reports of the conference calls, Googling some articles, possibly getting your hands on some sell-side research. If you can't do that, again, you're better off sticking your money in an index fund because when the stock goes down, you won't know what to do. My rule of thumb here is simple. If you ran into me on the street, and the reason I mention that is because people are now running to me on the street again, and I asked you why you like a certain stock, could you give me 3 reasons? And I mean real reasons, not just you like something because it's going higher or because your buddy told you it's going higher. If you don't know how they make their money or who their key clients are or even what businesses they're in, then you got to do what I've been telling people who catch me down on Wall Street. When I see them, maybe you got to sell. You got to sell now, okay? Because if it goes down, you're going to sell it then. I bring this up because without a mask, people can recognize me. And assuming I'm not holding NVIDIA the second, also known, by the way, as Ragu, I can carry on a conversation. But in the last week, when I asked people about their favorite stocks, I found myself at a loss because almost no one seems to know what they own. Still, they thirsted for individual stock knowledge because they know business is better now than they're coming out of the pandemic. They actually wish they could own better stocks. So what do? Look, I can't make you do research. I know you people will buy individual stocks regardless of what I tell you, even when they shouldn't. And that's why I'm trying to be pragmatic tonight about this. So I got a list. You want less homework? I got the less homework list. You need to buy stocks that are, 1, easy to understand, not stocks like Unity Software or Snowflake or Twilio or Okta. I mean, 2, you should still try to Google some articles and peruse the conference call. But most of all, you need to know and like the company's products so you can confidently buy more if the stock goes down. So let me give you some of the most accessible stocks I know in this market, stocks that are perfect fit for a lazy, lower homework portfolio. So if you bump into me on the street, you can say, hey, I bought the buy in what you know stocks. Or I was really lazy and I bought the buyers you know stocks. So the first one, just right there for you, Ford. I think the new Ford lineup is amazing. The electric F-150 series will be incredible. Personally, I'm eager to get a Maverick for my family because it's a smaller pickup that you can get the job done on this farm I bought with the winnings from my crazy foray into Bitcoin. I like the competitive edge of Ford's new CEO, who says he's going to bury Elon Musk when the Lightning electric truck comes out. I love that, right? Who's ever buried Elon Musk? This guy will. I even think the Bronco. Have you seen the Bronco? I think it's pretty cool. Most important, though, Ford's been hobbled by the chip shortage, and my sources tell me that shortage is easing and will end in the next month. My semiconductor friends tell me that the foundries are producing more feature-rich chips, which means Ford can pump out new cars and trucks the way it should. Plus, used car prices have finally plateaued. Last 15 days, they've been about the same, and that tells you new car production is coming back. I like Ford. Ka-ching! Second low-effort stock, Costco. The free samples are coming back. What more do you need to know? You need things in bulk, right? You want low prices? Maybe you need insurance, hearing aids. Hey, they got all sorts of stuff you may not even think about. If you go, you'll buy far more than you first came for. It's my kind of store. And remember, they make the money off the memberships, and the memberships are going to grow. And China is where the action will be. Ka-ching! Low effort stock number 3, American Eagle Outfitters, now known as AEO. The kids love this one. And we just bought it for the Charitable Trust, which you can follow along by joining the ActionAlertsPlus.com club. When Jay Schottenstein, the CEO, came on this show recently, he made it clear that his Aerie, and that's A-E-R-I-E brand, has real staying power. Did you know that it's had 26 consecutive quarters of double-digit growth? 26. That's no flash in the pan, right? Number 1 brand in jeans for the 15 to 25-year-old demographic, in denim is hotter than I've ever seen it, the best of them all. How did I learn about this one first, though? Simple. I see the credit card bills. Low effort stock number 4. Ka-ching. I hurt my back in January. Remember that? I mean, everybody knew about it. It was kind of ridiculous. I kept talking about it. It was repulsive after a while. Now, I got to do my physical therapy. I have this really cool pair of sneakers. I'm not going to say what they are because I can't pronounce it. But they fit me perfectly. And Saucony, help me here. Saucony, yeah! And I love them. And I'm always taking them on my vacation now, too, and that means I misplaced them. So I went on Amazon this morning, and lo and behold, I saw those shoes for half price. At first, I thought it was only one shoe. Then I realized, no, they're half price. And I went over everything I bought in the last year, and then I got a bunch of those things, too. I bought everything on half price. I bought a pair of binoculars. I thought it was like a one-ocular, you know? No, mine were stolen. Half price. Amazon Prime Day. The prices are insane! Yep, Amazon's universal. So I was chatting with Alexa while I was ordering. I mean, who else is up at 3:30 a.m., right? I mean, other than Alexa, getting some new music, asking questions. I saw that despite all the sturm and drang about Amazon orders coming late, all the delivery dates were within range, and they don't put some delivery date and then blow it. Now, I didn't click on any of the ads, although I did buy a pair of shoes last week by mistake. I didn't need the speed of the Amazon Warp Services division, but the whole thing reminded me how special this company is. I don't care if it's ahead or behind for the momentum plan. I would just buy some and buy some more when the stock goes down. Final low-effort stock, Apple. Now, if you don't own Apple yet, you should look at what you're holding at this very moment. Go look. Look at what's in your hand. Yes, right now. Or look at what's in your lap. Or look what's on the table besides your fork. It's the ultimate utensil. And then think about the bill you paid last night without knowing it. Yes, that's right, for the service stream. Think about what you bought in the App Store yesterday. Think about what would happen if your phone were to break or get stolen or left in an Uber or, heaven forbid, dropped into the pool or even the toilet. It's been known to happen. There. That's what's good. You buy in a good environment something like this. And by the way, Siri is not hurt if you call her Alexa. She just says no problem if you say that by mistake. Now, in this environment, you don't want to invest too much time and effort, right? You just want to go for stocks, the companies you know and love because they get hit. Well, I'm giving them to you, okay? There's 5. These are 5 that I've done a massive amount of homework for. I'd like to think I can't be out homeworked on any one of these. And so I can keep you up on them, and then you don't have to think, wow, I wish I had some stock that Jim liked. You have the confidence to buy more into weakness. Here's the bottom line. Accept this moment. It's a good one. Don't try for the hard money. Right now, go for the easy money, because the easy money is the best kind.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.